Let's break eminent domain down shark simple. Then we'll run a real case study and explain it like I would to a fifth grader.
Well, and don't they want to be careful about which land they buy so that it doesn't, eminent domain can't just, ride roughshod over them?
Well, again, a lot of people hate eminent domain, but let me show you a little trick. If I bought a piece of property in the path of progress and eminent domain was about to happen, what is the standard for eminent domain when it comes to the city or the state or the county or the federal government buying that property back from me for use in eminent domain? Can you give me a case study and break it down like a fifth grader? And basically, because I've had a lot of experience with eminent domain in the fact that investors will typically buy intentionally in the path of progress in order to go through eminent domain. Okay. Because it's not like they're taking it for free. They have to apply what is called just compensation or fair market value. Okay, so a lot of times the investors that go out and get property to be in the path of eminent domain are buying it at 10 cents on the dollar, because then they're going to get it at a fair market value for it. And what they'll do is a land banker will go buy it at 10 cents on the dollar and then turn around and wholesale it to a brother or sister and raise the HUD on that, raise the value on it by creating comps with it. So this is a practice that they do out there that allows them to make money off of the path of progress as it's coming through.
Love this question. Let's break eminent domain down shark simple. Then we'll run a real case study and explain it like I would to a fifth grader. What is eminent domain? Definition: the government, city, county, state, or even federal, has the power to take private property for public use: roads, schools, highways, utilities, etc. Rule: they have to pay you just compensation. Standard: just compensation is usually the fair market value, what a willing buyer and seller would agree on in the open market. Case study: Kilo v. City of New London, 2005. This is one of the most famous U.S. Supreme Court eminent domain cases. The story? Fifth grader version. A small city called New London, Connecticut wanted to build new shops, homes, and offices to help the local economy. A lady named Susette Kilo owned a little pink house in the middle of where the city wanted to build. She didn't want to sell. The city said, "We'll use eminent domain." Kilo said, "Wait, that's not for public use. You just want private developers to build new stuff." The fight went to the Supreme Court. What happened? The court ruled 5-4 that the city could take her house because public use can mean public benefit, economic growth, not just a road or school. She got compensation based on the home's fair market value, what it was worth in the market, not sentimental value. Lesson: eminent domain doesn't always mean highways. It can be broader, like redevelopment. Owners are paid market value, but not for what it could be worth in the future or emotional attachment. Shark takeaway for investors: buying in the path of progress means sometimes you'll benefit from infrastructure, but occasionally you get taken out by eminent domain. Always check text.maps, county transportation plans, and city thoroughfare plans before buying. If eminent domain happens, fight for highest market value with your own appraisal and expert testimony.